Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bhambwani here. I hope you're doing great in the markets and my videos are helping you decipher the signals of the market a whole lot more better. You have a better understanding of the market and I'm able to help you make some more money. You see, in this video, the idea to record this video actually came to me recently when I walked down from my building and along the storefronts I saw Christmas trees etc. being put up and the festive cheer beginning to come to the market. Now if Christmas is here, so is the New Year, and it is customary to basically start to guesstimate. Please understand I'm using the word guesstimate here. It's time to guesstimate what the markets will look like in the coming calendar year 2021. Now, since I'm going to talk about the commodities only, this is going to be about base metals, it's going to be about energy, and it's going to be about precious metals. I will also share my 2 bits, sharing my logic as to why I'm saying what I'm saying. So let's first start with industrial metals or base metals. I have been fairly consistent and persistent rather in my hypothesis that there is no super cycle in base metals. It's been a combination of easy and abundant money floating around in the markets, and it's been supply side constraints because of COVID. The supply chain is broken. Containers are piling up along the docks and labor has basically returned back to wherever they are from, especially the migrant labor, which is what is triggering a whole lot of disruption. Now, if you were to actually care to see what's happening in the mainstream and in the social media where news is concerned, majority of industrial metal production comes from Latin America, also known as LATAM. This is something that I keep mentioning a lot on my social media posts. If you see these guys, they are up to here in debt. They owe the international monetary lending institutions a lot of money. And they are categorized as emerging markets, which means their economies have not yet completely taken off. They are almost there, but they are not really there. So they need to attract a lot of money, and because they are dependent on overseas funds, any movement in the USD especially, if the dollar was to harden, which you see has started since the last couple of weeks, their currency, local currency goes down and they start to import inflation. And when they start to import inflation, they need to push up interest rates. So Peru, Chile, Brazil, Mexico, you've seen Argentina, they've all started to jack up interest rates. This is also to attract international funding. So there are 3 ways Latin American countries will start to basically raise or conserve cash. Number 1, raise interest rates, attract more money. Number 2, renegotiate in very polite terms, but in real terms, defer international loan repayments. Of course, officially, by offering a higher rate of interest, saying, okay, don't take the money now, let us negotiate, sit on the table, maybe you can give us 3 years, 4 years, 5 years extension, and we'll pay you higher interest rates. And the third and the most critical factor in trying to raise money, to export more of what they have to repay their debt, industrial metals. Which is why I think a super cycle, I always talk about super cycle with a great deal of cynicism. The super cycle theory seems to be brandishing in thin air. So next year, industrial metal prices are likely to cool down. They won't be as volatile as they were throughout 2020 and calendar year 2021. I'm not saying that it's going to be a bear market. I have never said that it's going to be a bear market in base metals. I'm saying that it's not a super cycle. It is a supply shortage triggered bull market, but definitely not a super cycle. So next year, there will be a whole lot more logic. There will be a whole lot of quiet movement as compared to the rough and ready sporadic patches of movement, which is a good thing. Let's now come to energy. I have again said oil will not go to 100, and if it does go to 100, it will kiss the 100 level. It will possibly be a photo opportunity, and then over a period of time, it will come down. For the sake of clarity, do note in my past videos, I have been talking about the Western Texas Intermediate or WTI, not the Brent oil. Because Brent is not something India imports. We have started importing from US, and what we have been buying primarily from the Middle East countries is a mixture of Dubai Sour crude and other grades of crude oil. So Brent is more expensive than WTI. I have never talked about Brent. I'm talking of Western Texas Intermediate. Here again, there's a reason why I believe that the idea about oil going to 100, 200, there are even talks about $300 a barrel in very small, sporadic, long-term options contracts, deals that I'm hearing in social media. In my last video on oil, I said $100 and above is kite flying. I stick to that. You need to watch the amount of debt that these Middle Eastern countries have taken. Now, again, like the Latin American countries, how do the Middle Eastern countries hope to balance their budget? By selling what they have, crude oil, natural gas. Second factor, which is, in my humble opinion, the market experts are completely ignoring. In 2022, you have the midterm elections in America, and it's very critical that President Joe Biden try and get inflation lower and cut corporate raw material costs. Now, what do the Middle East countries take from America? Number 1, military hardware. Number 2, military ammunition. Number 3, armed forces training. Number 4, computer hardware. Number 5, medical technology. Number 6, and most important, the largest amount of funding of the oil companies by way of buying their bonds is by Americans, which means the Americans are the creditors of the Middle East nations. Now, when you are being told by the wise guys that oil will go to 100, 125, 150, 200 or even 300 in some sporadic options contracts, you need to ask yourself which debtor will actually muster up the courage to tell the creditor, I need your military hardware, ammunition, medical aid, armed forces training, and a constant supply of money into my country. But hey, I'm going to twist your arm behind your back and I'm going to sell you what I have at 1, 2, 3, and 5 times more than what it's worth. Try doing that. So, simplistic as it may sound, I still debunk the triple-digit WTI Brent price. It might go there, like I've always said, it might go there, kiss there, and then fall back. It's been 8 to 9 months since I'm hearing $100, $120, $125 a barrel to WTI crude oil. For the last 8 or 9 months, the super cyclists haven't really convinced me. I still think in 2022, oil prices are going to remain subdued. Let's now come to precious metals. What do I think about precious metals? I think anything between 15 to 20% of your total wealth that you are allocating in financial markets should be in bullion. Between bullion, you have silver and gold. If you can stomach the volatility, I think silver needs to be 60% and gold needs to be 40% of the basket that you've set aside for bullion. If you're somebody who's a little more risk averse, and maybe 40% in silver, 45% in silver, and 55 to 60% in gold, because silver happens to be more volatile. Now, if oil prices are going to be lower, base metal prices are going to be lower, why am I advocating bullion? Because, hey, the dirtiest kind of inflation that mankind can ever be confronted with is food inflation. Why? because food is inelastic where its demand is concerned. I don't think people can say, okay, I'm going to stop consuming food or I'm going to cut it down by 50% or 60% because I can do without it. I don't think that's happening. So people will actually spend on food and cut back on other things, which means that inflation will actually hit where it hurts most, in the stomach. And let's rattle off some numbers, shall we? In the United States, inflation overall is hitting 48-year highs. In the Eurozone, 13-year highs. In India, CPI has hit 3-month highs. In Russia, inflation is galloping. In Brazil, the world's most blessed country, large in size, much bigger than India, which grows everything from green vegetables to coffee, to produces one of the largest quantities of alcohol, sugar, beetroot, etc. And it's rich in oil, gas. Food inflation is jumping. Argentina is actually clamping down on 1,400 items of day-to-day consumption and banning the export of beef so that food prices domestically can be curtailed. The Russians are imposing an export tax on wheat. After America, Russia is one of the biggest swing exporters of wheat. Why swing? Because they can swing the market prices globally with their statements of whether they will or will not export. The Russians are very clear. They're not keen on exporting wheat cheap. So 2022 will see galloping food inflation and rising food inflation is always a conducive time for precious metals to appreciate. You may not see the kind of rally that you're seeing in mid-cap and small-cap and SME stocks in bullion, but that's not supposed to anyway. All right, this is bullion. This is not a mid-cap stock. So over a period of time, you are going to see gold and silver attract higher and higher levels. But this is for delivery-based investors, not traders or speculators. We are talking about the longer term here, and we are talking about delivery. Friends, overall, I think the kind of volatility that we saw in 2020 and 21 will not be repeated in commodity markets. It will be a lot more quieter. I'm not saying it's going to be a bear market. All I'm saying is that an average retail trader who was put off by the wild movements in prices will see a relatively quieter market. Therefore, it should be hypothetically an easier market to trade, and therefore, keeping my fingers crossed, a lot more profitable in 2022. On this cheerful note, I'll bid goodbye to you, my friends, not before reminding you to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad, ugly, I welcome all your comments. And help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. I wish you have a very profitable day, my friends. Thank you for your patience watching my video. Till we meet again, this is Vijay Bhambwani signing off for now. Take care. Bye-bye.